All right, let's get right into it. The $1 million question, or maybe the $150,000 question by 2026.
I mean, you've seen the headlines, right? These massive numbers.
So let's
are
cut to the
flying around.
chase.
Is 150 grand per Bitcoin actually a realistic
Let's
target?
find
in
out.
just a couple? Some analysts are playing it a bit safer,
Figure
their
price
calling
tag.
for landing right at $100,000. And hey, that would be a huge
But
milestone.
a lot of experts think a real sweet spot is actually closer to
$50,000
that
mark.
$1.
Hitting that would signal a whole new era of mainstream
And then
acceptance for
you've got the
Bitcoin.
Super Bowls. We're talking seasoned investors who see a clear path, maybe even higher. So how in the world do we make sense of these wild numbers? We need to break down what's actually driving these predictions.
Ahead of ourselves.
Okay,
Let's do a
so
super
before
quick refresh on the fundamentals. Because if you want to understand its future,
So, Bitcoin, right?
and
It's
its
the
most
most important
cryptocurrency.
feature. The thing that makes it so different is that it's decentralized. Think about it. Unlike the
Single
dollars
government
in
or
your
central
bank
bank,
pulling the
there's
strings, it's all run by a global network
brings
of
us to the
computers.
absolute
Core of
that's
its value, scarcity. Check this out.
21
There will
million
only
Bitcoin.
That's it. That number is baked into its code.
Why
It
people
cannot
call
be
it
changed.
digital
Gold. And, basic economics tells you when more and more people, the price has to go up. So why 2026 specifically? What's so special about that year? Well, it all comes down to Bitcoin. It's like clockwork. And it's driven by this massive event called the halving. Honestly, this might be one of the single most powerful forces in the whole crypto market. Here's the deal. About every 4 years, the reward for mining new Bitcoin gets cut right in half. This means the number of new coins hitting the market slows way down. It's basically a pre-programmed supply shock. And if you look back at history, this event has been the main trigger for Bitcoin's biggest, most explosive bull runs. And you can see this incredible pattern emerge. After the first halving, Bitcoin blew past $1,000
to almost
after the second
20,000.
one, and after the most recent one, it hit that all-time high of around $69,000. Now, of course, past performance, this powerful cycle is exactly why everyone is watching so closely to see what happens next. All right, so
get to
now
the
the
main
main
event,
event, the numbers. We're going to look at 3 different scenarios for where Bitcoin could land by 2026.
Breakdown of what
Could
so-
happen. First, you've got the conservative case. This puts Bitcoin somewhere between 70 and 100,000, probably if the moderate scenario. This is the one a lot of people are betting on, which is between 100 and 150,000. That would be fueled by big institutions and companies finally jumping in. In the bullish case, whoa, we're talking over $180,000.
Like Bitcoin
Powered
ETFs,
by those easy-to-buy investment products and really friendly government rules. When you see it laid out like this, you can really grasp the potential scale. I mean, even the most conservative guess represents pretty solid growth from where we are. But those moderate and bullish scenarios, they point to a completely game-changing shift in how Bitcoin is valued over the next few years. So the big question is, what's going to decide which of these futures we get? Well, it's not just random luck. There are 5 key factors that we all need to keep an eye on. Let's call them the big 5. Number 1, institutional adoption. Are the big Wall Street players getting in? 2, regulation. Are governments making friendly rules or cracking down? 3, the global economy. A shaky economy or high inflation can actually be good for Bitcoin. 4, tech and security. Is the network staying safe and getting better? And number 5, the ultimate wild card, market psychology. Good old-fashioned fear and greed can send the price soaring or crashing. Okay, let's pump the brakes for a second. It is so important to be realistic here. As exciting as all this is, Bitcoin is definitely not a one-way ticket to the moon. There are some major risks we have to talk about. First off, volatility. This thing is a roller coaster. Prices can drop just as fast as they climb. You also have to remember, crypto is still a super young asset class. We don't know exactly how it's going to evolve. And of course, there's regulation. If a major government decides to crack down hard, that could seriously hurt the market. The big takeaway here, a smart long-term strategy beats chasing short-term hype every single time. So with all that in mind, if you are thinking about getting into it, how do you even approach something with this much upside but also this much risk? Well, a lot of people start with a really simple, time-tested strategy. It's called dollar cost averaging, or DCA for short. And the idea is beautiful in its simplicity. Instead of stressing out trying to time the market and buy at the absolute perfect moment, which is basically impossible, you just invest a small, fixed amount of money on a regular schedule. No guesswork needed. Here's how you do it. Step 1, you pick a schedule. Let's say every Monday. Step 2, you pick an amount you're totally comfortable with. Maybe it's just $25. Step 3, you automate it. Set it and forget it. This takes all the emotion out of investing. When the price is high, your $25 buys a little less Bitcoin. But when the price is low, that same $25 buys you more. Over time, this really helps to smooth out all those crazy price swings and lets you build your position without all the stress. So there you have it. We've looked at the basics, the powerful 4-year cycle, the wild price predictions, and the real risks you need to know about. We've seen scenarios for everything from $70,000 all the way up to $200,000 plus. Now, obviously, no one has a crystal ball, but the wheels are definitely in motion. So I'll leave you with this one final question to think about. After seeing all this, where do you